We have all of your Tesla stock news and analysis that you need to know for the day today, and there is a bunch of news. RBC Capital Markets reiterated an outperform rating on Tesla with a 12-month price target of $305 after hosting investors for a tour of the company's Nevada Gigafactory. Quote, unlike legacy OEM peers in the US who are pursuing JVs to make battery cells, Tesla is going solo, which should enable it to capitalize on IRA credits more than any other automaker and even be a tier 1 battery supplier. As William Brown says, Tesla is going to the moon and the world is quickly realizing. For the week of September 4th through the 10th, China reported 10,700 Tesla insurance registrations. This particular week is about 40% weaker than what you've seen in 2022. And there might be a reason for that. China's Ministry of Industry and Information Technology, MIIT, has approved the application for Tesla China's new Model 3 Highland. Tesla will now sell Highland for the Chinese market. Model 3 deliveries have been slowing down quite a bit in China, as China has not permitted Tesla to sell the Model 3 Highland in China until now. And you guys can see the drop of Model 3 registrations has been quite dramatic, whereas the Model 3, or the Model Y I should say, has been staying at these elevated levels. China's Model 3 registrations have been falling quite a bit since mid-August, as Tesla has really stopped producing the regular Model 3 and has started producing the Highland in Giga Shanghai. And the Highland was not even eligible for deliveries in China until now. So we should start to see this number pick up and start to beat the year-over-year weekly insurance comps. But if you look at the cumulative Tesla China insurance data in the past 52 weeks, that is this green line right here, modeling 2022. You can see 2023 has far exceeded basically everyone's expectations for Tesla in China in 2023, and you're almost at a new all-time high for Tesla insurance registrations, and you still have another 3 months left of this year. So long story short, Tesla is actually exceeding expectations from basically everyone in China. Also in the news, eligible Model S and Model X Plaid owners in the US can now buy upgraded higher thermal capacity brake pad kits for $750 and red caliber kits with HTC pads for $2,700. If you have a Plaid with black calibers, you can now buy red ones from Tesla if you want. Tesla is sending out emails to Plaid owners right now to start scheduling service appointments. Tesla has recently backed out of the Detroit Auto Show that is going to be starting here in just a couple of days, but Tesla is not pulled out of the EV track, where Tesla will be giving rides in a Tesla vehicle, or maybe a couple Tesla vehicles. We don't know the exact models, but this is what the track is going to look like. A new study says Tesla is poised to disrupt the insurance market just as it did the auto market. This is a new study from MarketWatch that suggests Tesla's pioneering use of advanced telematics is designing insurance risk may disrupt the insurance industry, as much of the company has already disrupted global automotive markets. While many traditional insurance companies are raising rates for Tesla car owners or refusing to cover Tesla cars at all, Tesla is offering its own insurance in select US states at significantly lower rates compared to the competition. Variable rates based on actual driving behavior, based on a driver safety score captured and calculated via Tesla's own proprietary software, the company can assign assign risk levels to customers and offer lower rates to drivers the company considers less risky. The score looks at driving behaviors such as following distance, aggressive turning, hard braking, seatbelt use, driving speed, and forced autopilot disengagement to determine a score from 0 to 100. The higher the score for the driver, the lower the insurance rate. Data from Geotab and the North American Council for Freight Efficiency shows the true capability of the Tesla Semi. From the information gathered, the Tesla Semi seems to be living up to the hype. Data from the Run for Less event hints at the capabilities of the Tesla Semi. Tesla's Class 8 truck was put through the ringer at the event, operating on its maximum payload capacity and traveling up to 500 miles round trip. Dave Milani from Rocky Mountain Institute shared some of the information from Tesla Semi runs. During Run for Less, Geotab and the NACFE collected data from 3 PepsiCo Tesla Semi trucks. Milani shared the results of each Tesla Semi's performance from the first day. Data for the first Tesla Semi has total miles of 416, estimated deliveries of 335 miles on a single charge over 8 hours. The day ended with 17.5% battery left, good for a little bit of a buffer. The truck was doing highway operations, driving 60% of the time, with speed predominantly at 62 miles per hour. Data for the second Tesla truck was 376 total miles. 227 miles were actually driven over the course of 6 hours. The day ended with 27% battery life. Spent about half of its time idle, but mostly at highway speeds when driving. It does say in a note this truck may have been loaded more heavily as it showed a somewhat shorter range than truck 1. And data for the third Tesla Semi was 377 miles with the battery bottoming out at 1.6%. Almost exclusively highway driving at 62 miles per hour. The takeaway is that the 350-mile truck is for real, but unknowns remain, like the load weight, as well as the variable conditions such as wind. These things can add more resistance and can drain the battery a lot quicker than your prime conditions. But so far, all good things to speak of from Tesla Semis. Esther Kokelmans on Twitter, or X, shows a short video he took yesterday at the presentation of the Tesla Model 3 Refresh / Highland in the Netherlands. Focus on the front cabin, ambient lighting, blind spot indicator, great finish of the interior, lights on the roof, and speaker on the roof. The sound system is superior, which you kinda can hear in the video. The feel to this car is sublime. Very safe, very comfortable, and futuristic. It almost feels like a baby Plaid. Enjoy. Tesla tops list of most shorted stocks for the third month in August. Tesla is one of the most shorted large cap US stocks for a third consecutive month in August. Securities lending data firm Hazeltree said in a report on Tuesday. Tesla stock rallied over 5% on Monday after a Morgan Stanley note suggested the automaker's Dojo supercomputer could bolster Tesla's market share, and Tesla stock actually rallied about 10% yesterday. Hazeltree, which tracks 12,000 equities globally, said the second and third most shorted stocks last month were Charter Communications and Apple, respectively, which is very interesting because Apple does not tend to be a highly shorted stock by any stretch of the imagination. Data compiled by research firm Whale Wisdom showed a range of different strategies underlying short bets against Tesla disclosed to the Securities and Exchange Commission on June 30th. Those included investors with funds taking long and short positions in stocks. Diamond Hill Lethal Funds and Foreman Funds, a Blackstone fund of funds contained the short positions of other hedge fund and investment managers. Hedge funds have been shorting U.S. stocks at a rapid pace in recent weeks, a Goldman Sachs note this week showed, and total short bets reached their highest value in 6 months. Hedge funds were net short consumer discretionary stocks, which would include Tesla for the year ending September 8th, according to the Goldman note. Quote, "If I'm honest, I've only lost money trying to short Tesla," said Dan Izzo, founder of the hedge fund Blackbird Capital, who did not disclose whether he currently had a position in Tesla. "Not because I'm wrong about it, but because the market can be irrational for longer than I can afford to be proven right." Tesla stock currently has $22.08 billion that is currently sold short in Tesla. This is up $2 billion from yesterday's number of less than $20 billion. So you're up about $2.2 billion based off yesterday's 10% rally alone. And if Bill Gates really is still short in Tesla stock, yesterday was not such a good day for him. Tesla stock today is down 2.32% as we are getting overall market weakness. Tesla's option activity is singing quite a different song. You have 1,348 orders totaling $383.02 million with a positive order value of 68%. So considering Tesla stock is down over 2%, you wouldn't expect the option activity to be this bullish. If you had a $100 bill, you are currently seeing $32 going into bearish options. That would be buying puts or selling calls. And you have $68 going into buying calls or selling puts. Very much skewed towards bullish positioning today. And really, when you look at the actual option flow itself, most of these trades are actually bullish, but some of the bearish hedges are quite large. So look at this January 19th, 2024, 458.33 put worth $41.56 million. Another January 19th, 2024, $450 put worth $45.6 million. And October 20th, 440 put worth $3.46 million. I think you're seeing a lot of hedging really heading into tomorrow's big data point, and that's CPI. Tonight at 7:50 p.m. Eastern Standard Time, you're going to get PPI month over month and PPI year over year for Japan coming out. And this could move our markets, but unless you get a big kind of spike or drop, probably something the markets will not pay attention to all too much. Now at 2 a.m. tonight, Eastern Standard Time, you're going to get GDP month over month, goods trade balance, industrial production, manufacturing production, balance of trade, a bunch of data coming out of the UK. So this will affect our market, specifically this GDP month over month number. You're expecting negative 0.2% out of the UK. Why is this important? Well, the current GDP estimates for the US is 5.6%. And this report comes out on October 26th. That's the Atlanta Fed GDP Now estimate. The average Wall Street economist is expecting around 2.4% GDP. That's because personal spending has been so good. Well, it could get rough because Thursday you have a retail sales number, and if the consumer slowed down in the month of August, that could be a black swan event for the market. So keep that in mind. It's a possibility. Markets could drop sharply if you get a bad retail sales number, because that's going to show the estimates are way too high for GDP. Now, and that would mean you're much closer to a recession than certainly Wall Street was expecting. Now, tomorrow morning, you're going to get the inflation numbers. I plan to actually go over this a little bit more in depth in the next video coming out later tonight. My expectations and what I think can happen to the markets. But long story short, your core inflation year over year is expected to actually go down from 4.7% to 4.3%. And your core month over month is expected to remain the same at 0.2%. This is great. This is fine if core stays along these lines, right? That would be great. That'd be fine. Perfect. Your headline inflation rate is expected to ramp dramatically from 0.2% last month to 0.6%. And then your year-over-year number is expected to rise from 3.2% to 3.6%. The only way I think the markets have a really big negative reaction off of CPI is if your core inflation metrics come in worse than expectations. That's where you could have a big problem for our markets. 10-year treasury yields are down 2 basis points so far here on the day. You are still sitting at the highest levels we have been at in this cycle, so markets are not really expecting any kind of Fed easing for quite a while. 2-year treasury yields are now above 5%, up almost 1.5 basis points on the day today, sitting at the high of this cycle. The CPI data tomorrow will be so important because it's basically a coin toss whether we get a rate hike or not in November as well as December. The current odds, especially for December, 56% chance of a continued pause and almost 40% chance of a rate hike. So this data is going to be quite important. And markets are even saying, hey, there could be 3 rate hikes back to back. They're assigning it a 1/10% probability to bring the Fed funds rate in between 6 and 6.25%. But if that inflation rate does come in higher than expectations, especially on your core, markets might start to price in a lot more rate hikes by the end of this year. That potentially could be a problem for the markets. Even the odds of 2 rate hikes by December, maybe that's a skip in September, a rate hike in November, and a rate hike in December to bring the Fed funds rate up to about 6%. That's sitting at about a 5% chance right now. So if CPI does come in hot, this will be a problem for the markets. The 10-year and 3-month yield curve inversion is starting to steepen a little bit more today. This is actually negative. When this chart goes under this black line, that's not usually a bad thing. That's usually not when the sell-off actually happens. When things are really bad, you see this blue line shoot up. And that's exactly what you've seen during COVID. You could pull this back basically in any time in history. Take it back to 2000. And you could see the same thing. When you're actually going inverted is not when there's a problem or when there's pain in the markets. But it's actually when you start to rise, you start to get some weakness in the markets. And look down here to what has been happening recently. You've been rising. You were inverted 1.88% at one point. Now you're only inverted 1.26%. So the higher this thing goes, likely the closer we are to an actual recession and the more pain we're going to see in the markets. Tesla stock today is at $267.80 per share, down 2.11% here on the day today. It looks like we did get rejected once we broke above this long-term downtrending level of resistance that I've literally had drawn on this chart for the past almost 3 years now. You did get rejected here, but you're still above your 265 support level. So if the data is bad tomorrow, if the markets do fall and Tesla falls under 265, then your next support level is around 256. That is your 50-day moving average. We've seen a lot of resistance here just over the course of the last 2-3 trading weeks or so. You'll probably find a lot of support there if we come back down to test that level. That would essentially be filling the gap that we did see yesterday. And that 10% gainer, I believe, was a multi-year record. It's been a very long time since Tesla stock was up 10% in a single day. And I do think there's positive things still to come for Tesla, like the Cybertruck, like the Model 3, like any price hikes that we get for the Model Y over in China. That could also be very good. We reported that news to you yesterday, that it looks like Tesla's preparing to raise prices on the Model Y and actually discontinue the lowest selling version of the Model Y. So there's a lot of positive things on the near-term horizon for Tesla. I do think any weakness we get more than likely is not company specific to Tesla. It's more so the market's just coming down. If the markets come down, then Tesla stock is going to come down as well, even though we've had a lot of great news. Now, if we do get some form of a black swan event or just really bad data, something really negative happens, then I would be targeting that 230 level. That's your 100-day moving average, and then under that, about $200 per share for your 200-day moving average. That would be filling most of this gap that you really seen from back here after the bottoming out that we seen in April of 2023. You would kind of fill that gap if you came back down to about $200 per share. It's a possibility, not something I would hang my hat on. As you can see, the RSI is at 56.26 or 59.26. That's a pretty strong RSI there, and the MACD has just recently went positive after being pretty dang negative. And whenever this has happened in the past, you have tended to get a much larger rally in Tesla stock. So certainly wouldn't bet against Tesla here, but if you want to have some hedges on your portfolio, I definitely would not blame you. We have hedges on our portfolio. Come check it out. Link down below in the description of this video if you guys would like to come trade with us. Every time I make trades, I send out alerts, whether they are winners, they are losers. It's a really good tool to have to know kind of what I'm looking at, what I'm thinking about, as well as the logic behind it, right? Because we provide logic and explanations on all of these trades that we make, why we're making them, why we think there's a good risk to reward. Do a lot of different things over there. If you guys want to come hedge out your portfolios, come trade with us, link down below in the description of this video, or just support the channel. That's always an option as well. That's going to do it for this video. Stay tuned to the video at 8 p.m. tonight. That one is also going to be pretty dang crazy. Khaleesi, say Tesla to the moon. Tesla to the moon. All right. All right. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.